Today, throw another job on the Barbie. Hello again, it's Martin North from Digital Finance Analytics, well noticed post covering finance and property news. Today, the ECB is set to lower its deposit rate to 3.25%, a move that would mark its second straight reduction. The central bank is seen making that cut after more data has showed a rapid retreat in inflation due to poor growth in the region. However, the story in Australia is running down a different channel, with the ABS reporting that the unemployment rate was steady at 4.1% in September, and that was in line with a revised figure for August. Australia's powerful stretch of hiring extended into September, and the unemployment rate held steady, prompting a rise in the currency as traders scaled back bets on the Reserve Bank's first interest rate cut. The two-year yield moved higher, and overnight index swaps now show just a 70% chance the RBA will begin an easing cycle in February, having fully priced in a 25 basis point cut prior to the jobs data. They actually keep pushing a rate cut out, given suddenly high inflation and strong jobs growth. Both the employment to population ratio and the participation rate climbed to records, indicating more people were seeking and securing work. The ABS said, with employment rising by around 64,000 people and the number of unemployed falling around 9,000, the unemployment rate remained at 4.1%, where it's been generally over the last 6 months. Despite the slight fall in the number of unemployed people, the strong rise in employment saw the participation rate rise by 0.1 percentage points to a record high of 67.2%. Employment has risen by 3.1% in the past year, growing faster than the civilian population growth of 2.5%. This has contributed to the increase in the employment to population ratio by 0.1 percentage points and a 0.4 percentage point over the past year to a new historical high of 64.4%. The record employment to population ratio and participation rate shows that there are still large numbers of people entering the labour force and finding work in a range of industries as job vacancies continue to remain above pre-pandemic levels. While the number of unemployed people fell slightly to 606,000 in September, overall, the number of unemployed people has risen by around 90,000 people since September 2023. Despite this rise over the past year, there are still around 93,000 fewer unemployed people than there were just before the start of the COVID-19 pandemic, when the unemployment rate was 5.25%. Season-adjusted monthly hours worked rose by 0.3%, slightly less than the 0.4% rise in employment. And the growth in hours worked was stronger for males, up 0.7%, while hours worked for females fell 0.3%. This was supported by male employment growing by 0.6%, around double the 0.3% increase in female employment. The underemployment rate fell by 0.1 percentage points to 6.3%, and that was 0.1 percentage points lower than September 2023 and 2.4 percentage points lower than March 2020. And the underutilization rate, which combines the unemployment and underemployment rate, fell 0.2 percentage points to 10.4%. That's remaining well below the 13.9% recorded in March 2020. The trend, employment and participation measures are at all-time highs, while unemployment and underemployment measures are still low, compared with what we have seen before the pandemic. This suggests the labour market continues to be relatively tight, the ABS says. And in fact, the latest jobs ads is still pointing to strong labour demand. Now, the RBA has left its key rate at a 12-year high of 4.35% this year, and Michelle Bullock has all but ruled out easing in the near term. Today's release, along with third quarter inflation due out later in the month, will be important inputs to the RBA's November the 4th to 5th policy meeting. So in the magic land down under, the prospect of higher rates for longer still remains. That is, until something breaks. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.